levels today, guys. The only double M level we had. Exactly the price where that accumulation took place. So you can recognize that these are important to us. We can recognize that the impact that these things have are really, really, really important. Now, it doesn't mean it's going to be a sell, but does it not make sense that when you see a dealer key and you see that they are selling the dealer key, and the reason why it's not collapsing is because there's some sell side deltas here. So they've got to go through the price levels. They've got to go through the gears here to get that trade on, right? So it makes sense. It makes sense with the stories. It makes sense with the rest of the stuff that are going on in the background. That, as Amin says, that curve flattener that was developing in the background as well. It makes sense to be looking at this as a real thing, because it is a real thing. Anybody that thinks that this is a, what is that thing that they call it, the Amarillo bands or something? Show me the way to the Amarillo bands. I think there was a song about it. And what is it? Armadillo. Show me the way to Armadillo. Something along those kind of lines anyway. So there's the Armadillo bands. It's got nothing to do with the bloody Armadillo bands, has it? It's got nothing to do with Fibonacci's. It's to do with the fact that the dealers have a hell of a lot of money posted here that they need to think about at 65. It's what their pricing tells them they need to do. It's very, very much like our trade on NVIDIA. Cheers to Mike for that one. So Mike reminds us to take a look at NVIDIA, and we always get an idea about what we should be thinking about. And when we see NVIDIA and we have an idea about NVIDIA, we've got the ability to then work out the straddles. And when we work out the straddles on NVIDIA, and we work out where the prices really are, not because of some Armadillo bands, not because of some Fibonacci extensions, not because of a Bollinger Band, but because of the actual pricing that the dealers used for their implied volatility, something that we can all recognize that's possible in advance on the right-hand edge of the charts. And when you look at that and you say to yourself, my goodness, that was on the right-hand edge of the charts right there. There it is. It's visible. We did it. Look. Strike current price minus $30 plus $35, minus 30 plus 35, a $65 straddle. So we're going to go price minus 30, price plus 35, price minus 30, price plus 35. It gave us the bottom tick price to buy NVIDIA. And then NVIDIA earnings came out with this amazing result, and we just bought up even more NVIDIA. We made a fortune on NVIDIA. And it's the simple stuff, isn't it? When we look at the simple stuff done well, you end up with trades that look like this. So there was the price. There was the $30 discount. So there's your $30 discount price. There's your $65 straddle there. And that's your outcome. You buy into this, you buy on the way up through this phase here, and then you take your monies. You take your monies, and just as we took our monies, everybody took their monies. Everybody took their monies here. Brilliant. Absolutely brilliant. And I said that we'd probably trade to this price at the cash open. How far were we away from that price at the cash open? Almost to the tick, correct? Almost to the tick on NVIDIA. We said that this would be the price at the cash open area. They took the price down to that within what? Within what, a couple of dollars? On a $700 stock? That's pretty accurate. Now, that's pretty accurate stuff, guys. Get the stuff done, eh? Get the stuff done. What a trade. So cheers to Mike for reminding everybody about NVIDIA on that one. Hopefully Mike managed to get some money out of it. And what a great trade. What a great trade. Really was a great trade, actually, guys. That was superb. Sexy like a box of chocolates.